Okay, hey you guys, I know I wasn't in class today and I said that we were going to go over this example of how to create a financial statement and how to create your income statements and do your cash flow and everything like that. I know some groups are going to start selling tomorrow after parent-teacher interviews, so I want to make sure that you're able to do this, okay? So we're going to do one short video that I'm just going to keep track of the cash flow, and on the second video I'll do the income statement. So we practiced both of them in class and we never went over our final answers. So what I've done here with this example that we had with Darren and Devin for their business project, I've outlined everything that was a purchase in pink and everything that was a sale in blue, because those are two. Well, first of all, every time we do a sale, that's adding money to our company because we're making a profit with that. Every time we make a purchase, that's an expense. So that is money that we'll be subtracting from the balance of our business. So for this first one, I just want to make sure that you guys know how to do your cash flow, because tomorrow, well, whenever you're selling what your product is, and I know some groups are selling tomorrow, you need to make sure that you have a cash box with you and that you're keeping track of how much money is going in and out of there. Again, as we talked about in class, if you're going to have cash in your cash box, the idea is that if you're charging for your product, you're able to give change to people. So if you are, for example, like Darren and Devin, going to start out with $14 in your cash box, then it's really not going to help if you have a $10 bill and 2 loonies, because you're not going to be able to give change to people. Okay? So when you have your cash flow box, you want to have as much change as possible. For example, when they're charging $1.50 for their product, it's a good idea for them to have a lot of quarters on hand to be able to hand back quarters to people who are making payments. Okay, so whatever your price is, make sure that you have the correct amount of change or the correct type of change on hand in your cash box. So it's up to you to either make a cash box, or you could probably go buy one at the dollar store or something like that. Okay, so the first one, we're just going to keep track of the cash flow, and so that you have a certain amount of money in your float. You should not keep all of your money for your business in your cash flow, because otherwise, if something goes wrong and you lose that money, like, it's basically just supposed to be so that you can give out change. You don't want to be keeping all of your money in there. At a certain point, after a few series of sales, you might have over $100 in your cash box, and you don't need $100 worth of change. So it's just risky to be keeping it all in one spot. Okay, so we're going to go over the cash flow. So in that case, we're only going to focus on these ones that are in blue, and then we'll look afterwards at the income statement that has things that are that we'll have to balance back and forth between the purchases that we've made as well. Okay, so even though the first thing is talking about a purchase that they made for $6 to be able to make their cupcakes, so we went over all this in class, their first actual sale is going to be on November 15th. So what I'm going to do, so this is the paper that you have for your cash flow. Okay, so I'm going to start off by writing the date here for my event, November 15th. Okay, and it says that they started out with $14 exactly in their float, which is because everybody's starting off with $20 for their business, and as you saw, they spent $6 on the cupcake mix, so they have $14 left. So the first time, you might want to put all of your money in there so that you have enough change to hand back to people. Okay? But yeah, the number of items they have at the start, well, if we look back at what it says they started off with $14 in their cash box. They began with 20 cupcakes and sold them for $1.50 each. When they were done, they had 3 cupcakes left. Someone left a $1 donation. So if we look at this, we have 20 cupcakes at the start. We have 3 left at the end. So you have to calculate how many that means that you sold. So you should be able to do this simple math in your head. You had 20 at the beginning, there's 3 left. So that means that you sold 17 cupcakes that day. Okay? The sale price per item, well, they're selling their cupcakes for $1.50 each. So your total sales that you have to calculate is you're doing the number of items sold times the price. So you're selling 17 cupcakes at $1.50 per cupcake. I don't mind if you use a calculator for this stuff because I don't want you to get any of the figures wrong. So if you need to use a calculator, then use it, okay, for your business. But if you calculated it, this would have been $25.50. So that's how many sales you made. If you notice in the paper, it also says that somebody else left a $1 donation. Okay, so now you have your total sales of $25.50 and somebody left an extra $1. So your profit for right now, you add these two up. So your sales plus your donation is going to give you your profit. So you made a profit of $26.50 on that night. Okay, the balance here though, it's important to remember the balance here is talking about how much cash is supposed to be in your box after you have finished that night. So if you made $26.50, you're not going to have a balance of $26.50 because you had $14 at the start because you needed to be able to give change to people. Okay, so to get your balance, this one, you have to do your profit, which is the column right beside it, but you also have to add the amount of money that was already in the float. Okay, so you had $14 at the beginning. You have to add that to your $26.50. So the balance, if you add that up, you should have $40.50 in your cash flow. Okay, so in your cash register, however you've made your cash register, at the end of the night, if you made a profit of $26.50 and you started out with $14 so that you were able to give people change, then if you add those up, you should have $40.50 at the end. Okay, now if we go back to look at what other evenings they were selling products. Okay, so I'm going to skip over the purchases for right now. We're going to look at that in the income statement. Okay, but the next time they're selling is on November 19th. So I'm going to add, same thing, a date for November 19th, but let's just read what it says. So Darren and Devin sold more cupcakes. They started off with $20 in their cash box. So again, even though they made $40.50, they're not keeping all of that in their cash box. They're just going to keep $20 in change to be able to give people change. Okay? They began with 27 cupcakes. So notice this was the 24 cupcakes that they made, plus the 3 cupcakes that they had left over on November 15th. Okay, so that's up to you if you want to sell old cupcakes that you made or not. These people did in this question, so they're selling the ones that they made fresh plus the 3 that were left over. Okay, again, they're selling them for $1.50 each. When they were done, they have 2 cupcakes left, which they ate. I noticed some people were confused by the fact that they ate these cupcakes. They're not going to be able to resell them the next time because they're not selling again until December 10th. So they decided not to sell those cupcakes. That is kind of money that they're losing, but they can't sell 2 old cupcakes from like a month ago. So they just decide to eat them, okay? But you do have to still factor in that they have 2 left because that means they didn't sell those 2. And then it says someone left a $4 donation. So I'm going to go ahead and fill in my information for November 19th. Okay, so on November 19th, they're starting out with exactly $20 in change in their cash flow. That's your decision how much money you want to keep in the cash flow, but again, you should not be keeping all of your money in there. They start out with 27 cupcakes to sell, and at the end, they have 2 left. So they eat them afterwards, but it's important to factor in that you're not selling these 2 cupcakes. So you do 27 minus 2. You sell 25 cupcakes that night for $1.50 each. Okay, so here you're going to do 25 times $1.50. So I've already done these calculations. Like I said, if you want to use a calculator for them, that's fine. But when you do 25 times $1.50, you should come up with $37.50. Okay? Then they're also adding a $4 donation because somebody left $4. Okay? So again, my profit is my total sales, $37.50, plus my donations, which is $4. So you add these together. So you're making a profit of $41.50 on the second night. And again, my balance is my $41.50 plus, as it says up here, my float. Okay, so profit plus float. So I had $41.50 plus $20 that was already in the cash register is going to be $61.50. Okay, so it's important to realize that the first time we do the income statement, the number that's on here is going to be the same as the income statement because that was the very first time we used our float and it had all of our money in it. But after that, you're not keeping all of your money in your cash register. We only kept $20 in there. So when you get your $61.50 at the end, that's not necessarily the total amount of money that your business has, okay? So in this case, like the balance in the cash register on that night is $61.50, but there's still another $20.50 that you took out of the cash register and you're storing it somewhere. I don't care where you're storing it. You're storing it under your mattress or something like that. You're just not keeping it in your cash register. So you have to remember, like, there's a difference here because you had $40.50, but you only kept $20 in your cash register. So that's why the numbers are going to look different on the income statement. Okay, so there's a third night that they're selling, and I'm just going to finish that one, and I'll stop this video and do a second one about the income statement. So the third night that they sell, we'll go back to our other paper. The third time, it says on December 10th, Darren and Devin sold more cupcakes. They start off with $20 in their cash box, again that time. They begin with 24 cupcakes, again for $1.50 each. When they were done, they had 3 cupcakes left, which they gave away. 3 people left 50 cents each. Okay, so this is 3 times 50 cents, which is $1.50 worth of donations. Okay, so we can take care of that right away and we'll add that in for our donations. But so let's just fill in our last row for our cash flow. So again, I have $61.50 in my cash register at the end of the night on November 19th. But when I go back to sell again on December 10th, I am only keeping $20 in my cash register. And that is, again, to have change. So you don't want to have a $20 bill. You want to have a lot of quarters, loonies, that kind of thing, so that you can give change to people. Okay, so on December 10th, they start out with 24 cupcakes. They end up having 3 left, which it says they give away, which we said doesn't really matter. It's just that you still have to factor in that you're not selling all 24. You're doing 24 minus 3 is 21 that we sold that night. 21 cupcakes at, again, $1.50 per cupcake. When you calculate this, so 21 times 1.5, you should get $31.50. Okay, plus we saw 3 people donated 50 cents each, so that's $1.50 worth of donations. So again, for our profit, we're going to add up the total sales plus the donations. So you're going to do $1.50 from your donations plus $31.50 for the total sales. So your profit for that night is $33. And you're going to add $33 from your profit plus the $20 that was already in your cash register at the beginning of the night. So at the end of the night, and you should sit there and count the money after to make sure nothing went wrong, that you lost some of the money or something. At the end of the night, you should have $53 in your cash register. Okay? So this is something like, it is also a general life skill. If you are ever working at a cash register, when you close your cash at the end of the night, you would have to balance your cash register. You'd have to go through everything that you've done to make sure that you have the same amount of money in your cash register as you were supposed to. When you look at the profit that you made plus the float, so plus the amount of change that you had already in your cash register, that is supposed to come out to a certain balance. And if you were working at a job with a cash register, you would have to be able to balance your cash. Okay, so some of these figures are going to be used in the second video with the income statement, but I just wanted to make sure you guys knew how to do your cash flow in case some people were starting to sell tomorrow after parent-teacher interviews.